Hello, everybody. Welcome to March. We are going to talk about some of our favorite stocks to buy right now. I'm joined by Tyler Crowe. And before we dive in, please take a minute and check out the link you see on your screen. You can get the top 10 stocks to buy right now from the Motley Fool. And it's the best way to support this work we're doing on YouTube. So I'm going to go first because unlike our normal back and forth, I'm going to be pitching the stock that Tyler hasn't heard of. And I'm actually kind of familiar with the one he's going to bring to the table. So mine is a company
like Freaky
called
Friday here.
Right. So mine is a company called Marqeta. Ticker symbol is MQ. So they are a card payments technology company. Their biggest client by far is Block. They are the company that provides the technology behind the Cash App card. That accounts for roughly 70% of their revenue. That's, their big company. This is like, I tell people, think of Marqeta like buying an Apple supplier. Yes, all of the other companies it does business with represent the big growth opportunity. But at the end of the day, you have that one big backbone business that really just provides steady revenue. And they just renewed their Cash App contract through 2028. So it's a very, very good revenue visibility. Other customers of theirs include Uber, Affirm. They're the company behind Affirm's card products. Instacart, they're the ones, I don't know if they have Instacart where Tyler is, but if you place an Instacart grocery order, they're the company that allows the shopper to pay with your credit card in the store without having your actual credit card. So it's like technological solutions like that for card payment situations. So they're a big company. They process over 4 billion transactions per year, about $240 billion of annualized processing volume flows through their network. They are the fourth largest issuer of debit and prepaid credit cards in the U.S. The only companies that are bigger, Bank of America, Wells Fargo, and JP Morgan Chase. So pretty good company to be in. A lot of potential here. I actually was surprised at this statistic because we think of the U.S. especially as becoming such a cashless society. And in many ways it is, but over 40% of businesses still use checks in their day-to-day businesses. So like to pay vendors and things like that. So there's a lot of different potentials with, business to business payments, third party payments. I mentioned the Instacart thing like that. And Cash App is clearly very, very happy with them. Now, their revenue did go down in 2023. The big reason is because they renewed that Cash App deal and the pricing reset. In simple terms, Cash App is a much more important part of the business than it was a few years ago, just because it's huge. And the rates were renegotiated in exchange for extending the deal. So it produced a slight revenue contraction, nothing to be too alarmed about. The business has gotten very efficient. I know Tyler's not a fan of me saying adjusted EBITDA for anything because it's,
Doesn't exist.
This is a family show. I can't quote Charlie Munger, but he says something very negative about it. But on an adjusted EBITDA basis, they actually turned profitable toward the end of the year. Full year GAAP loss of $220 million about. They have $1.3 billion in cash on their balance sheet and no debt whatsoever. Losses are narrowing very considerably. Just to put it in perspective, adjusted EBITDA loss went from $42 million in 2022 to just $2 million last year. So definitely heading in the right direction, showing a path to profitability. And they viewed 2023 as a really transformative year. I already mentioned the Cash App renewal. They're starting to roll out credit card capabilities, not just debit and prepaid cards. They've already signed a couple of customers to issue credit cards on their behalf. That just launched in October 2023 and has huge potential. Think of like what like Synchrony Bank does or something like that. They have that type of product. So that's Marqeta. Really interesting business. I love the kind of the Apple supplier nature of the business where they have the Cash App for the big revenue and a lot of other growth potential.
So before we jump into mine, I actually want to ask a question about Marqeta because this might be helpful too. Is how do they actually generate their revenue? Is it on the swipe of the card, or is it kind of like a contract that is a fee based on who it issues for?
No, good question. It is a percentage of volume. They get a very small percentage of that 220 billion or 240 billion of annualized volume, And when you're talking about 4 billion swipes per year, that adds up considerably.
So it sounds like it kind of on a revenue recognition basis, it's a lot pretty close to like a Visa MasterCard in the sense like it's a percentage of each swipe, right?
Right. They definitely make money on the swipe fees. There is some service-based revenue, but that's the majority by far.
Okay, cool. So I'm going to go a little bit more known and pretty simple to understand, but I'm going with what looks pretty attractive right now to me is Marathon Petroleum Corporation. And Marathon Petroleum is a refiner. They convert crude oil to gasoline, diesel, and the myriad of other products that we use when we refine oil. Comes asphalt needle coke for making graphite, which we just happen to use for making EV batteries. There's a lot of products that people don't really realize that come from the refined from refined petroleum. But basically the big moneymaker for them is obviously gasoline, diesel, and jet fuel. But what is so attractive to me, at least for this business, and it's something that's been underappreciated for a long time, pre-shale revolution in the United States, refining was a awfully cyclical business, and the margins were absolutely terrible, in large part because we were a little oversupplied with refinery capacity, as well as having to import a lot of very expensive fuel from overseas. Now, with a major cost advantage with shale from the United States, as well as Canadian crude, which tends to be much, much cheaper than a lot of global benchmark priced oil, you have a very kind of structural, sustained cost advantage in terms of refining crude in the United States. And then there is significant export capacity. The United States produces way more diesel than it actually needs. And so we actually export a lot of diesel to Europe at a very much higher prices than what we pay for diesel here. Kind of on net, we tend to import a little bit of regular gasoline from Europe. It's a little bit of the switcheroo there. But with that kind of like structural advantage in mind, like we have this advantaged crude, we have like outside the United States markets that we can export to now at pretty advantaged prices. It's kind of made refining a much more sustainable business, and one that doesn't quite go through the times of really, really tough where they have to shut down a lot of capacity and maybe only run at like 65, 70% because there's just too much. With the refining capacity we have now, most refiners run in the 85, 95% range, which makes them very profitable over the long term. And so that's kind of the entire industry, but Marathon Petroleum in particular has been very good at translating this into shareholder returns, mostly in the form of buybacks, because as a stock that rarely sees a price above 10 times earnings, management has been buying stock back at prolific rates. Over the past 5 years alone, they've bought back their share count is down 44%. So it gives you an idea of just how much the company is able to plow back into the business. And that's on top of a regular dividend that has grown at a pretty impressive rate over the long term. Right now, it's only a 1.8% yield, which is quite low for them. But over the past 10 years, they've grown it at a 14% rate. So annualized. So it kind of gives you an idea that this is an industry that is not the industry that people thought it was, like pre-shale, pre-2008 crash. And as a result, it's been immensely profitable while people still continue to ignore it. And so if there is a company out there that I want to buy and hold for a long time, especially in something like oil and gas, which is very cyclical, refiners, and in particular, Marathon Petroleum is pretty attractive.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.